Hey everyone, a very warm welcome to yet another interesting episode of the Fisdom Wealthcast. And today, as you can see, obviously, I'm super excited, super stoked. I always am. Each time I invite this rockstar financial service leader to, one of our shows, we have with us Aashish Somaiyaa, who is currently the CEO of WhiteOak Capital Mutual Fund. So, Ashish, a very warm welcome to the Fisdom Wealthcast.
Thank you, Nirav. It's always my pleasure. Thank you for inviting me again.
So आशीष फर्स्ट थिंग्स फर्स्ट आजकल बहुत सारी बातें हो रही है इन्वेस्टर्स एनालिस्ट टू बी इन्वेस्टर सभी का कोई ना कोई ओपिनियन तो है ही इकोनॉमी को लेकर मार्केट को लेकर और एट वन साइड ऑफ द एक्सट्रीम वी हैव पीपल हु आर अप्रिशिएटिंग कि द इंडियन इकोनॉमी इज ग्रोइंग स्ट्रॉन्गर बाय द डे काफी ऐसे फैक्शन सेगमेंट्स है इंडियन इकोनॉमी के जैसे कि इन्वेस्टमेंट्स इंडस्ट्री मैन्युफैक्चरिंग सर्विसेज व्हिच आर शोइंग इम्प्रूवमेंट एंड ग्रोथ beyond the pre-pandemic levels, right? So there is hope. There is a really strong undercurrent, positive undercurrent in the Indian economy. पर साथ ही साथ यही सेम जो ऑडियंस है उनके मन में कहीं ना कहीं एक डर है दैट जो इन्फ्लेशनरी प्रेशर है जो कि गवर्नमेंट और आरबीआई को पुश कर रहा है टू टेम इट जो भी मॉनेटरी पॉलिसीज कहिए या फिजिकल पॉलिसीज कहिए जो भी इम्प्लीमेंट हो रहा है a combination of these could probably push the Indian economy to the brink of recession, राइट सो एक तरफ हम सोच रहे हैं कि स्ट्रॉन्ग अंडर करंट्स है और दूसरे तरफ हमें रिसेशन का भी डर है एंड क्वाइट ऑफन द नॉट द ट्रूथ लाइज समवेयर इन द मिडल ऑफ द एक्सट्रीम्स राइट सो आई एम गोइंग टू गेट टू माय फेवरेट क्वेश्चन द इंडियन इन्वेस्टर्स फेवरेट क्वेश्चन एंड द क्विंटेसेंशियल क्वेश्चन दैट इज मार्केट क्या बोलता है सो आपके ख्याल में आपके हिसाब से आज के डेट में एज वी स्पीक मार्केट क्या बोलता है
So, Nirav, there are actually multiple questions embedded into this question. And instead of jumping straight to the market, I'll give an answer. Pardon me, but slightly longish answer, but in two parts on your question. Right? See, one thing which always distracts investors is this particular phenomena that there is always a long trend. Okay, and there is always a long trend, and this long trend gets confused or gets tailwinded or headwinded by a short trend. So what happens is that there is a long-term story or a long-term trend, but always there are current circumstances, and the job of those circumstances is to ensure that you get distracted from the longer trend, right? So now let's put it this way that in recent times, till about 2015-16, China was actually rocking. So now I'm first talking about the longer trend, right? Till very recently, China was actually booming, and by the way, most of our viewers, it's not their job to know, so they may not know. But most of our viewers may not have known that, say, for example, the world's GDP. I'm not an economist, and this may not be accurate, but the world's GDP is around $90 trillion dollars. In any year, in a good year, the GDP of the world expands by 3%, 2.5 to 3%. So for ease of calculation, let's take for a moment, rounding off, that the world adds incremental output of 3 trillion in any given year. Okay. Now, China, which is an economy of $15 trillion, okay, in a good year would grow 9 to 10%. So just imagine that incremental output in certain years that they added was in the zone of 1 to 1.5 trillion, right? Which means that there were years when incremental output of the entire world, half of it came from China alone. Okay. Now take US, which is bigger than China but doesn't grow as fast. US, which was 20 plus trillion GDP, okay, would in 2019, such a gigantic US, they had zero unemployment, and they also grew 3.5%. So out of 3 trillion incremental output, just imagine, out of 3 trillion incremental output, imagine that 60%, like 2 trillion or some such number, would come only from US and China. Now, if countries like US and China are blowing the lights out and contributing 40, 50, 60% of incremental output in any given year, that is one information I've given you. Just park it somewhere in your mind.
Yeah.
Second thing, fundamentally, is that money is made or returns are generated on growth. So if the world's GDP remains 90 trillion, or at a micro level, if a company which does 1,000 crore of sales and 200 crore of profit, if every year it makes 1,000 crore of sales and 200 crore of profit, the value of the company will not change, because every year you are making 200 crore. So why should the value change? But
Right.
when 200 becomes 220, that's when returns are made. Returns are always made on the delta or the growth. Okay.
Absolutely.
Now, combine both of these pieces of information, and you will realize that suddenly the world has hit a spot where where China recently said one quarter, I think first quarter, China declared 4.5% or 4.8% growth.
Yes.
And the world has arrived at a juncture where people are not believing it, saying this 4.5 is overstated. China is not even growing that much. And US is forced to engender a slowdown to control runaway inflation. Correct.
Right.
Now, why did I say long trend? So, how many countries are there in the world which have the scale
Hmm.
and can grow? Till very recently, it was only US and China.
Right.
India is a country which is in the top 5, top 6. You know, the 3 trillion versus 15 trillion, we are tiny. But on
Right.
3 trillion, if you grow 8 9%, okay, that 300 billion or 200 billion which you contribute will matter a lot. But
Yes.
in 2019, India was 2.5 trillion, and quite embarrassing. But with that 2.5 trillion base, even we grew only 3.7%.
Hmm.
So see, when you're 2.5 trillion and you grow 3.7%, you are not even contributed 100 billion to the world's incremental output.
Right.
So you are not the one who's contributing you're not a heavy hitter basically. Why am
Yeah.
I giving you all this information is because investment is driven by returns, and returns are made on growth. The other thing about growth is that having high growth on a small base is of no use. So Pakistan GDP is 300 billion,
Right.
correct? So they grow 20%, they will add 50, 60 billion while they are also in a bad phase. But let's say on 300 billion, if they grow 20%, they will
Yes.
add 60 billion incremental output.
Yes.
On 3 trillion, if we grow 8, 9%, we will add 5 times of what they can add with 20% growth.
Yes. Yes.
So the investment goes where there are returns. Returns will be made on growth. And
Right.
growth is material only if growth comes at a scale.
Right.
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 Now, India is finally at a juncture where it is one of the few countries in the world which can give growth at scale. This is one longer term thing which one must keep in mind. The second thing is that till now the world has been growing based on phases. Like first it was Europe, then it was Japan, then it was US, then it was China. But there is one tragedy with the world, which is that the countries which have been contributing the highest amount of growth to the world, and the countries which are currently the most wealthy countries of the world, they all are unfortunately aging very, very rapidly.
Right.
Like
Right.
China followed a one child policy for the longest period. In
Yeah.
Europe, the population is aging.
Yeah.
They are not reproducing enough. Same for Japan. US is the only outlier because it has fantastic immigration policies. Correct. But rest of the world, what is the issue? They cannot grow at scale because their populations are aging. And
Right.
GDP is population multiplied by productivity.
Yes.
So if your working age population and your population is declining, then your wealth is of no use. You'll have to put that wealth where there is growth.
Yes.
Right. So now you put all this information together, what you will realize is that the long trend is that finally India's time has come or will come, or it has come some years back, but we have been slow in responding. There is a myriad set of views on this. Some people
Hmm.
say that, we are not capable of capturing any opportunity. Some people say that, okay, the opportunity is 5, 10 years away. We had a lot of competition from other countries, blah, blah, blah.
Hmm.
So there is different views on this. Long story short, according to me, the long trend is that we are one of the rare countries which can give growth at scale, especially in a landscape where the richest and most wealthiest countries of the world are aging very rapidly and they cannot maintain their growth. The corporates and the companies and the growth oriented people in those countries will be forced to invest into countries like India or Vietnam or Bangladesh or whatever it is. So people moving manufacturing from China to India, the government giving production linked incentives, India attracting a record $81 billion of FDI. All of these are realities. All of this is the long trend.
Hmm.
Problem is the short trend, which is that abhi ka kya? Right now, though, I can see that the indexes come from 18,700 to 15,500 or whatever it is, right?
Right.
So that's why I said that the short trend is always there to distract you from the longer term issues.
Right.
That's the whole point, and I'm not worried about the shorter term issues. I don't think the foreigners are selling because anything is wrong with India. The foreign
Right.
selling, or is got to do with a transition in U.S. monetary policy. It's got to
Yes.
do with the war. It's got to do with oil prices. Now those are international problems. It's not that they are homegrown problems. Homegrown story I have told you, and you also
Absolutely.
narrated very well. That domestically the conditions are very strong.
Yes, yes, absolutely. In fact, I love that point that you made around population multiplied by productivity is the GDP, right? It reminded me of one of Elon Musk's very famous tweets that the population is on the verge of collapse, and he urged everyone to procreate more, reproduce more.
Yeah, yeah,
I
yeah.
feel Indians till now ज़्यादा प्रोत्साहित करने की जरूरत नहीं है. I feel we are going pretty
No, our
well on
problem is
that.
productivity, not the population, actually.
Exactly, exactly. So
US
while
countries like US and Japan, they are highly productive. They are technology leaders. They are even
absolutely
willing to increase their retirement age. They are
right.
ensuring that women are working. So they are doing everything to ensure productivity. Because their population is the problem. In our case,
Yes.
population is not the problem. We just need to make people productive. I think so. They are different challenges. And let me tell you, attracting foreign investment of $81 billion in FDI, giving production linked incentive, all
Yeah.
of these are ways to enhance productivity of a country which has lot of population but no productivity. Because when
Absolutely.
money comes, what do? They set up factories, they give you new technology, right?
Right.
The money, where is the money being invested? It's being invested in data centers, it's being invested in factories, it's being invested in different types of robotics and drones, and now semiconductor chips and electronics and all, right?
Yes.
So all of that investment is only going to enhance our productivity.
Yep. Yep. And I completely agree. I completely concur with it. So India is like this really power packed package of immense potential that needs to be unlocked, lever after lever through various.
We've started to do the right things, probably. See, we've done, we are not known to be the best in harnessing our potential. So previously, we sued Kane India, and we made Vodafone literally go bankrupt. And we didn't allow POSCO to set up that steel plant in Odisha. There are many things we have done which meant disrespect to foreign capital. But I think
Yes.
now we're changed. We gave back one and a half. We gave one gave 1 billion back to Kane India. We ensured that Vodafone finds business atmosphere conducive out here.
Yeah.
We gave them a long rope in terms of spectrum payments. There are many things which we are doing right now, and we've given away $32 billion as tax
Yeah.
incentives for setting up factories out here. So we are probably doing some right things now. Finally,
Yeah, and in fact, it is also well captured in our ease of doing business rankings. Which the shifts might not seem much to in people, but people often don't realize that even a one rank shift requires such immense work. Especially if you're managing a country and economy as complex, as diverse as the Indian economy. Right. So, Ashish, while speaking, you spoke about the US, the external, headwinds and the spillover effects that the Indian economy is facing. And this reminded me of one of the incidents that happened with me just a couple of days back, right? As recent as I don't remember, yesterday या day before yesterday, मैं अपने एक दोस्त से मिला था. और जो हमारे दर्शक है, ऑडियंस है, उनके कॉन्टेक्स्ट के लिए मैं मुंबई में रहता हूँ, जो कि महाराष्ट्र में है. और महाराष्ट्र का राजनीतिक स्थिति काफी एक बहुचर्चित विषय है लोगों के लिए, राइट? It's a pretty headline grabbing situation, the political situation in Maharashtra. So in the conversation I happened to make a remark कि यार the political situation काफी unpredictable होते जा रहा है. And I realized that friend, without batting an eyelid, his response was, क्या हो गया, अब बाइडेन भी impeach हो रहा है क्या? And I realized that अपने घर को छोड़ के, domestic affairs को छोड़ के, why was his immediate reaction to talk about something that is so many seas away, so much of so many kilometers away? Uska dhyan turant us taraf gaya. And I realized that that's something very similar that even investors are doing right now, right? The all the investors and analysts, at least most of them that I talk to, are busy covering the FOMC meeting, looking at the US Fed stance, thinking about the US elections that are coming up, and they are all looking at the West and investing right here in India. So nazare wahan pe hai or investments yahan pe hai. So I find it, obviously I appreciate this entire interlinkages, global trade, globalization, interdependencies, but somewhere I just don't get, I'm yet confused that can I classify this as over reading into a situation, or trying to create a spurious correlation between things that may not directly be of use to us? Are we reading too much into unnecessary things? What's your view?
Yeah, so see, I think that having awareness and tracking some of the things which impinge on our markets is certainly important. Okay, and you are talking about 2022. I can narrate to you an instance of 2007 when I used to travel in Mumbai in a local train, from the suburb of Goregaon to go to my office in town. Once I was in the train, and Mr. Alan Greenspan increased
Yeah.
interest rates by 0.5%. And in the railway train in Mumbai, in suburban train, two gentlemen were discussing why Mr. Greenspan's decision was, quite questionable. And very choicest kind of language that, suggesting basically that the Fed doesn't know what the hell Fed is doing, that type of
Right.
thing in a suburban
Yeah.
train in
Yeah.
Mumbai. So it
Yeah.
happens quite often, where people start, let's say, talking too much about their pay grade, that kind of thing. But anyway, on
Yeah.
your question, what I found is that yes, a lot of market commentary today. If you hear analysts, fund managers, they're talking so much about US economy and US markets that for a normal investor, it would actually become confusing as though they are invested in the US.
Yeah.
You know, but two things I would like to draw a distinction. One is that one must be objective and understand that how are we connected with them, and we must be able to segregate economic connections versus fund flow and stock market related connections. Because money, stock market, the investor money, foreign portfolio investors or institutional investors, or an American mutual fund investing into India.
Yeah.
So money is totally fungible. As far as fund flows are concerned, we are absolutely 100% correlated. I have no doubt about it.
Right.
But that is in this transitory phase. Look, when US is raising interest rates, when there is a specter of inflation, people would get worried because US is raising rates, tightening liquidity, and to the extent that fund flows are correlated, we are certainly getting the short end of the stick. But the
Yeah.
point is that when the transitory phase is over, when the dust settles, जब लोगों के होश वापस आएंगे, तब तो उनको यही दिखेगा कि इंडिया is trading 15 times 1 year forward PE multiple,
Hmm.
right? Maybe it might get to 14, 13, whatever it is, if there
Yeah.
is any 5-10% further downside. So when the dust settles, और जब होश ठिकाने आएंगे, then what people will realize कि boss, when there was a transition in monetary policy, when there was a risk off in equities, तो बेचते समय तो सब बेच दिया.
Right.
Then they will realize कि भाई इंडिया never went into recession. See, देखिए आप global financial crisis हुआ था 2008 में.
Right.
US went into recession. World
Yeah.
over, equity, there was a risk off. There was selling
Yeah.
in every market. There was selling in
Yes.
our market. But
Yes.
our GDP still grew 7%.
Yes.
This
Yes.
is 2009-10, I'm telling you,
Yes.
right? So when the dust settled, what happened? We got more money than what had gone out,
Yeah. Yeah.
right? So
Yeah.
what happens is that when there is panic, when there is a moment of heat, right, then
Hmm.
बेचते हुए तो सब बिक जाता है.
Yeah. Yeah.
See, even today, global emerging markets. See, recently I read this statistic, Nirav, that 75 to 80% of the money which comes to India is non-dedicated funds. What it means is that we get bulk of the money from some global equity fund, global emerging market fund, Asian fund, BRICS fund, whatever. The
Yes.
one large category is global emerging markets, which I am told is $2 trillion in terms of its asset under
Hmm.
management.
Hmm.
Now, just imagine the world over, people have put $2 trillion into global emerging markets and see what havoc has happened to their money. In the
Yeah.
last 6 months, because of politico-economic interferences, Chinese tech companies have taken a bashing,
Yeah.
right? Then, in sympathy with that, US tech has also taken a bashing. And
Yes.
then, the war and oil prices and commodity prices, and Russia also, which is a fair part of global emerging markets and BRICS, etc., Russia has, obviously gone haywire completely. Now, I must tell you, Nirav, that 35% of a global emerging markets fund is invested in China and Russia. So if you have
Mhm.
$100 in a global emerging markets fund,
Yeah,
$35 has been in duress in the last 6 to 9 months. What do you
yeah,
expect those investors to do? If they withdraw money, if they withdraw $100 from a global emerging markets fund, for no
yeah,
fault of India, $20 will go out.
yeah, yeah,
So what I'm
yeah,
saying is flows are correlated, but don't assume that the economies are correlated.
yeah.
Second, very big distinction. We are inflation is top of mind. Let's not assume that our sources of inflation are the same as US. I would just like to spend a moment here.
Please, yeah,
Pre-COVID, India was in a very bad phase. Like pre-COVID, our GDP growth was 3.5%. Our
hmm.
system level bank credit growth was zero, and our inflation was 2%.
Right,
Correct.
yep,
Where was US? US was booming from 2010 to 2019. They had a dream run.
yeah,
Correct.
yeah,
In between, Mr. Trump cut corporate taxes.
hmm.
And they had a expansionary monetary and fiscal policy for 10 years. A
Yep,
gigantic country with 21 trillion GDP grew 3.5%, and with 32, 33 crore people and whatever labor participation they have, their unemployment was zero.
yeah, yeah,
They were booming, they were flying. COVID was 1.5 month phenomena. Then Mr. Trump actually sent money, literally credited
yeah,
everybody's bank accounts.
right,
Kisi ko
yeah,
3,000, kisi ko 5,000, right?
right,
Now just imagine, they are already flying. On top
yeah,
of it, they give humongous stimulus, meaning directly giving money into people's accounts, and they are middle class people who don't need the money, by the way. I'm
yes,
telling you firsthand, I have people out there who don't
yeah,
need the money and they receive thousands of dollars of credits. Okay.
yeah, yeah,
Now you have really stimulated demand. Anyway,
hmm.
your demand was flying for 10 years. On top of
Yes,
it, supply chain issues. On top of it, oil and commodity prices and the war. So
yeah,
US has, if you can count a number of sources of inflation, they have activated all sources of inflation.
yes,
India is not there. We didn't have demand side inflation. We were not flying. We were not booming. We have not
yes,
even gone ballistic cutting taxes for individuals, or cutting or giving stimulus or anything. We didn't do anything crazy. Yes, of
yeah,
course we'll have inflation because food globally, food inflation is there. Oil prices are up, but our
yeah,
government is doing what it can. Like cutting taxes, not allowing exports of wheat and sugar and stuff, right?
yeah,
बट अवर इन्फ्लेशन, इसीलिए जैसे आप बता रहे थे वो सही बता रहे थे आप. इन्फ्लेशन, व्हेन वी से इन्फ्लेशन, व्हेन यूएस, व्हेन पीपल से देयर इज हाई इन्फ्लेशन इन यूएस, हम उसको अपना मान के चलते हैं. अरे उनका इन्फ्लेशन अपना इन्फ्लेशन नहीं है. इट्स टू डिफरेंट थिंग्स. Correct.
absolutely,
And by the way, before COVID, India was 2% inflation, right?
right,
In
right,
US, 2% inflation is fantastic. In India, 2% inflation means you are basically bordering on recession, because in India, 2% inflation means that for billions of people, millions of people, there is no wage growth.
yeah,
Yeah, food prices are not going up,
yeah,
right?
yeah,
If there's no wage growth, you're not paying your drivers and other people enough, right? The
yeah,
construction workers. Real estate sector was down in the dump. Employment was depressed.
yes,
So our economic cycle, we were not in a teji, we were in a mandi. So
yes,
our economic cycle is not comparable to US. Our inflation is not comparable to their inflation. Our reason for raising rate is not comparable to their reason for raising rate. And why
yes,
FPIs are selling has nothing to do with India, actually, if you ask me. So
yes,
most of our inflationary causes or most of our market causes are transitory.
yes,
Can't say the same for them.
hmm.
That's the
Yeah.
difference.
Yeah, I feel something of a very similar tonality that I had heard during our RBI governor's recent speech, and even the recent actions that for a very very long time everyone on the street believed that we would be taking cues from the US, and central bank जो भी decision लेता है वो US फेड जो डिसीजन लेता है उसी को एप करता है या उसी को कंटिन्यू करता है, टेक फॉरवर्ड करता है, right? But I feel in the past couple of years, especially pandemic ke dauran, not just the government but also the central bank made it evidently clear that while there are interlinkages with the global markets, and there is all reason to look at the US Fed, decisions are made basis domestic context, basis local context. बहुत चर्चा हुआ है कि ये जो interest rate hike का cycle है, RBI has been lagging behind the curve, कर दी. But ये जो भी comparison domestically देखेंगे, I don't think that it is as bad a situation as people are painting it. The central bank did things the right way and at the right time that they felt it was feasible to do, because obviously they have to balance growth and inflation. And India में perception का तो issue है ही है, जहाँ पे along with inflation imported, and other economic headwinds being imported, most of the fears are also being imported, within the Indian markets. So that is obviously there. Ashish, am I audible?
Sure. Yes, 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 please.
I think the network has conked off for a bit.
No, there is some lag in the network. I can see that, but I can hear you clearly. I think Nirav has got dropped off. Maybe we'll be on standby for a couple of moments.
Yeah. Hi, I'm back. Am I audible?
Yes, yes, yes. Please continue.
Yeah, so sorry, slightly patchy network. Yeah, so, getting back to the point, I realized that, the central bank also did the best that it could. And I feel, all the strong undercurrent that the Indian economy is enjoying today, I feel it's a byproduct of good decisions being made. We cannot empathize enough with the, fine balancing act that the central bank and the government needs to do to steer through such times. And it's best to have faith. So इसी के चलते हुए, let's zoom in a little bit and talk about the markets. The current way that we see markets, the broader markets or the benchmark indices, there's definitely a lot of volatility. There's no real sense of directionality at this point in time. Most of it ऐसा लगता है कि demand supply का ही purely byproduct है, जो whatever volatility that we're seeing. So what's your view on the markets very specifically, if you might want to include any triggers that you believe will really spur
Sure.
sentiments and really help the markets pick up from here on? What would those triggers be?
Sure. So, like, we have been talking a lot about, correlation with the US and people reading too much into US and thinking like India is US and those kinds of things. So there, if you see one of the things I just mentioned in the previous part of our conversation, I said something like when the dust settles. And I said that whatever is happening in US, is a transition in their monetary policy. So there will be a certain point in time till which the Fed will be what we call hawkish, like there is repeated stress or emphasis on tightening monetary policy and slowing growth and reining in inflation. So, people need to get some visibility on what the Fed is doing and, how they'll get a handle of things. Correct. So that is what I meant by a transition in monetary policy, or that's what I meant by let the dust settle. So let's say
Yeah.
that is another 3 months, 6 months, or whatever it is. Now, when the world is trying to get a handle of what is happening in US and what they are doing, till then, yes, volatility will be there. See, the best sign of uncertainty or the best sign of transitory or letting the dust settle. There are days when the stock market goes up 2%, and yet another days when the stock market goes down 2%. Now, everybody understands that when does the market function in such a volatile fashion is when the market can't make up its mind whether it wants to go up or whether it wants to go down. That always happens when people are not clear. So right now, the name of the game is to keep patience, not to draw conclusions.
Yeah.
Right?
Yeah.
Don't make deterministic judgments. In
Yeah.
fact, it's a good time to keep on adding to your SIPs and keep accumulating, because this is a godsend opportunity. If you ask me, whenever our market corrects for reasons which are beyond our borders, it
Yeah.
means that they are just creating an opportunity for us. Okay.
Right.
So if you asked view on the market, I think that when the dust settles, when this transitory phase is over, which according to me is, let's say, this calendar year, right? So
Mm-hmm.
let's say 1 year out from now, 9 to 12 months out from now, I expect that globally all of these turbulences to settle down, and people again being able to see objectively that which are the attractive markets and where they should be actually allocating money. So my
Yes.
personal expectation is that a lot of the FPI money which is going out, a lot of the selling which is happening in India, I can say with reasonable confidence that whatever has gone out and much more will actually get back invested back into India, because I said at the onset that there is a long trend and a short trend.
Yeah. Yeah.
Correct. So the long-term lay of the land demands that a lot more investment is attracted into India, and that we are in for some great times in the next 3 to 5 years. Uh, that's the view for a 3 to 5 year perspective. I think more than what has gone out will come back, but I cannot run away from the fact that next 3 4 months, till the Fed is raising rates, till the Fed is making all types of commentary, till there is one statement today and another statement 7 days later, till then
Mm.
the world can't really settle down. The
Yeah.
second thing that one needs to, but for India, for the short term also, one needs to watch out one more thing. If there is any de-escalation on the war, now oil
Mm.
prices have come all the way from 125 to nearly $100.
Yes.
If there is financial, see, the world is worrying about US and China slowing down, so that's
Mm.
quite a dichotomy, right? If US and China are slowing down, then why should oil be 125? Yes, there
Yes.
is a war, but a lot of it is financial speculation in the oil markets. It's not that
Yes.
the demand has gone up ballistic, and it's
Mm.
not like Russia's supply has got totally cut off. Correct.
Yes.
There is some
Yes.
financial speculation and some curtailment of supply. I'm not some expert, but those are the rumors. But what we have to watch out for is that if the financial speculation recedes because there is concern on global growth, then why should oil hold up so tight? If there is
Yes.
any de-escalation on the war, if
Yes.
oil prices keep falling like this,
Mhm.
so we are as impacted by oil and commodities as we are impacted by the US related challenges. So US related challenges, all this commentary and rate and all that will keep coming for next 3 to 6 months. But in the intermediate, if there is any change on the geopolitical situation, then we might see some relief. I would just say that next 3 to 6 months, let's say this particular calendar year, let's not try to make any deterministic bets. Let's just keep investing regularly. But 1 year out from now, if you ask me, we'll be in a much, much better position.
Yes. So Ashish, you said that the current time is equivalent to a godsend opportunities for investors, especially retail investors, to accumulate, step up their SIPs, etc. और इसी से मुझे याद आया कि आपका एक एनालॉजी मैंने सुना था जब जो आपने शुरुआत की थी कि you were trying to understand the flow patterns in the mutual fund industry, and then you related it with the lift example.
Mhm.
I feel that was a wonderful analogy, and I would love for you to, just reiterate it for the benefit of our audience.
Yeah, in fact, Nirav, even yesterday on one particular, media question appearance, I was
Yeah.
asked that, what is our experience or what is our sense of money coming in, inflows or outflows,
Yeah.
etc. So even at that time, I was explaining. See, what I've seen is that generally speaking, uh, what happens is that people don't like to withdraw money when they made a 10-15% decline in NAV,
Hmm.
right?
Yes.
And people withdraw money when there is a sharp dip in the market and then there is a recovery. So you've given them reason to fear for their wealth, right? So when
Yes.
100 becomes 80, people are unhappy, but they don't withdraw.
Yes. Yes.
But if the 80 were to come back to par, then people would say, okay, this is a bad experience. Let's close this case. Let's close this chapter. Let's just get out. Now,
Yeah.
this, how it is relatable. See, it's well known that, there are many real world phenomena you can understand better and you can explain better if you try to look for parallels in other areas. So now
Yes.
let's take a simple example. Places like Mumbai or Gurgaon, or where there are a lot of skyscrapers. All of
Hmm.
us, we end up going to meet someone or some meetings or something. See, a lot of times what happens is that in these skyscrapers, just to get into the lift or the elevator, there is a queue. And I have
Yes.
myself seen many times that, when you queue up and your turn comes, you just enter the elevator. And then you realize that, oh, okay, I wanted to go to the 21st story, but, when I entered, I was in the queue, I just entered, but actually the lift is going down.
Yes.
Now imagine a situation that it happens that, you want to go to the 21st story. When your turn comes, you get into the lift. And instead of going up, the lift is going down, basement, वगैरह.
Yeah.
So you say, okay, that's fine. Eventually, all lifts will ultimately all will go up, right? So I mean, let it go to the basement. You keep standing. Now, from the ground level, you enter. Let's say the lift goes to basement level 3, and
Yes.
bad luck. Just when it gets to basement level 3, there is a power outage.
Hmm.
Okay. Now and you spend the next 5 minutes in the dark. It becomes a bit humid and a bit warm. Some difficulty, heavy breathing. You start fearing for, suffocation,
Hmm.
lights out. And after 5 minutes, the emergency response kind of kicks in, and the lift kind of comes back to the ground floor. Now, my question to you is that how many people you think will keep standing there? See, they've been suffocated for 5, 7 minutes, complete
Yeah.
darkness. And then the emergency response has kicked in, and the elevator comes back to the ground level. Now, the question is that how many people will keep standing there and say, yeah, okay, everything fine. I anyway want to go to the 21st story. It's okay. रुकते हैं ना, चलते हैं ऊपर. And how many of them are there who will bolt the moment the door opens? कि भाई आज नहीं जाना, अगली बार देखेंगे, लेकिन अभी आफ्टर दिस सफोकेटिंग एक्सपीरियंस आई डोंट वांट टू गो टू दिस बिल्डिंग, आई डोंट ट्रस्ट दिस एलिवेटर एनीमोर, आई एम नॉट, you know let's just scoot. So that's the
Yeah.
point. Most people, a lot of people will scoot, and there are
Yes.
very few people who will say that, okay, this is a outlier event, you know
Hmm.
this is an outlier event, it's fine, let's just go to the 21st floor.
Yeah.
Now, I am not discussing lifts and elevators, basically about the market. See,
Yes.
generally speaking, everybody who enters the market, they all come for long term, 3 years, 5 years. When they're investing, it's all long term.
Hmm.
But the market is market. You enter at 100. There are many times instead of going from 100 to 200. See, people think that they should make 15%. If you say 15%, in 5 years, 100 should become 200. Or if
Yes.
it's 12%, in 6 years, 100 should become 200. But
Yeah.
in 6 years, if 100 has to become 200, it will not go in a straight line. First, the 100 can become 80.
Hmm.
Sometimes 6 year can take 7 years.
Hmm.
Sometimes six can take 4 years also.
Yes.
Correct. But 100 can start by going to 80 first, and then. So what happens?
Hmm.
Most people, when 100 becomes 80, they are feeling suffocated and frustrated, but they will stay there. But the moment it comes back to 100, they've seen the worst. They're about to see the best, but they just, get frustrated and they exit because it's a bad start. I
Hmm.
think stock markets are not like elevators and lifts. You're not going to get suffocated. Ultimately, it's a cyclical or a mean reverting phenomenon, right? If the
Yes.
long period average is 4%, you will
Hmm.
get there, not in a straight line. That's the point I'm trying to make.
Yeah. Yeah. So in
Only
fact, yeah.
and actually, when the lift is stuck down, you should double down. Actually, that's the lesson, because eventually it will go up.
Absolutely, absolutely. In fact, इसी example को लेते हुए, you spoke about something very interesting that also, brings my attention to another very popular question that we keep receiving, right? You said कि in straight line में, increment नहीं होगा, right? 100 का 80 हो सकता है, 50 हो सकता है, and then it will reach 200 over a longer period of time. Fine, agree. But these days, I come across, so much. So many perspectives rather. I'd like to cite one of the most popular perspective that I receive, and that is the very popular mathematical perspective कि आज अगर मैंने इन्वेस्ट किया 100 रुपीज और वो 50 हो जाता है, तो 50% डिक्लाइन हो गया, बट वो 50 को फिर से अगर 100 लाना है तो मुझे 100% इंक्रीमेंट चाहिए होगा. तो जब 100 से 50 होता है, तब there is no reason for me to double down, because the path upwards is going to be all the more difficult, and I may or may not achieve it, right? So ये एक सोच है जो mathematically it is correct, but from a perspective standpoint, from a context standpoint, it just doesn't make sense. But you know I want to hear, how would you explain this phenomena, and how would you give clarity for people who are thinking about investments this way?
See, it's like this, if you relate this example that, 100 became 50. Now,
Hmm.
if 100, like you rightly said, if 100 becomes 50, it's 50% down. But for
Yeah.
50 to recoup to 100, it's 100%. तो गिरने के लिए 50% गिरना चाहिए, लेकिन उठने के लिए 100%, तो 100% रिटर्न कहाँ से आएगा? That is the whole fear.
Yes.
And
Yes.
even now, say 100 has become 20, so you're 20% down. So on the way down, it's 20, but on the way up, it has to be 25%.
Hmm.
Right. So now look at it this way, that if there is a child, and you tell the child that there are 5 chocolates, okay,
Yeah.
and you take away one chocolate, correct,
Yeah.
so the child has lost 20% of the chocolates,
Yes.
right? But for 4 to become 5, he has to win back, he or she, the baby has to win back 25% of the
Yes.
chocolates, correct.
Yes.
Now this logic of 20% down and 25% up, it works, it appears like that if you discuss in terms of physical objects like chocolates.
Yes.
But stock market doesn't behave like a physical object. The correct example is not 5 chocolates becoming 4 chocolates or 5 chocolates becoming 2 chocolates. The correct example is to visualize a spring. Like a spring is a mechanical object, right? Let us say there is a spring which is 10 centimeters of size,
Yes.
and you compress the spring by 50%. You compress it, you measure it, it's 10 centimeters, you compress it, you measure it, okay, now I've made it 5 centimeters. So that spring has collapsed by 50%. Now I have a simple question for you. If I release the spring and if I let it recoil, will it recoil back to 7.5 centimeters, which is 50%? Or will it go back to 10%, or to
10,
10 centimeters, which is 100%?
10
So the correct
centimeters.
visualization is not 5 chocolates. The correct visualization is a spring. Because when you compress a spring and you release it, it goes back. Now, why is this more relatable to the stock market? Because a chocolate is a physical object. If somebody steals it and eats it, it's gone. It's not coming back. Okay. But in the stock market, the length of the spring is comparable to the prices or the index level. Okay. And when you compress the spring, it stores kinetic energy. It gives you some resistance. That stored kinetic energy or that resistance is actually comparable to the earnings of the companies. So,
Yeah.
given that companies are earning, see, in the last pre-COVID, okay, pre-COVID, the earnings per share of Nifty companies was for 7 or 8 years. The earnings per share of Nifty companies pre-COVID for 7 to 8 years was in the range of 400 to 450.
Yeah.
Today, it is 740. And people are expecting that when March 23 comes, after all this oil and commodity and whatever has happened, people are expecting it will still be well over 800.
Yes.
And March 24, which is called 1 year forward, one financial year ahead of the financial year where you are currently living, that number is expected to be 950 to 1000. तो जो मार्च 24 को हम 1 year forward बोलते हैं ना, that is well over 900. मतलब लोग तो 1000 का प्रोजेक्शन, अगर आप ब्लूमबर्ग वगैरह पढ़ेंगे तो इंडस्ट्री एस्टिमेट इज 1000. तो 15,000 डिवाइडेड बाय 1000, टुडे वी आर 15 times forward PE multiple,
Yes.
which
Yes.
is much below the long term averages. मैं तो वो भी नहीं बोल रहा हूँ, मैं तो बोल रहा हूँ कि 1000 नहीं 900 अभी भी. So what the point is that the stock market 18,000, 17,000, 16,000, 15,000 stock market compress होते जा रहा है. But the earnings per share of companies has gone from 450 to 750 to 850, projected to become 950 or 1000. So the point is that the stock market is more comparable to a spring. If you compress a spring by 50%, given that companies have earnings, and when stock prices fall, doesn't mean companies lose their ability to earn. See, it's true that if earnings decline, stock prices should decline. But the converse is not true, that every time stock prices decline, the earnings will decline. That's not true. If you have a rope, you can pull, you cannot push. So if earnings are driving stock prices is true, but every time stock prices fall, earnings are going to fall is not true. Right?
Yes. Yes.
So like it happened in COVID. In COVID, the index fell 40%. But post-COVID, the earnings have gone up by 50%. What forget falling 40%. Right? In COVID, then Nifty went from 12,500 to 8,000. Okay. In that period, 8,000 went back to 17, 18,000. But in that period, the earnings have recovered by more than 50, 60%, and the cash flows have recovered more than 100% for companies.
Yes.
So it's more comparable to a spring, not comparable to physical objects.
Yes. Yes. And I've realized that the narration of data is a pretty tricky game, and averages and percentages make it all the more trickier.
You should see, when something is in front of you, when something happens, you should have the correct visualization. If you
Yes.
you need to be able to reframe the problem in the right perspective. You need to visualize the right things.
Yes.
Correct. Like if my son is upstairs and if he screams, if my visualization is that every time my son is screaming there is some disaster, no man, he may be hanging from a rope and acting like Tarzan. He may be screaming out of sheer joy. I mean, I can't assume that every time my son screams, he's jumped from somewhere and he's got hurt, right? Sometimes he screams in sheer joy. So we have to. I'm not saying be careless about your kids. I'm just saying that you should get the right visualization in your head.
Yes. Yes. And also
Only
you
then
must
you
have,
can respond correctly.
yes, and if you are not able to visualize correctly, at least leave some benefit of doubt, leave some room for it.
Absolutely right. Yeah. Yeah.
Don't
Absolutely right. Every
don't
time
really.
you can't just, yes, absolutely right. You said it
So
better.
yeah, in fact, yeah, percentages by, I read this very funny thing that how the narration around data also takes tricky turns. So there was a headline that in this particular village, 50% of the men married 100% of the women, and uske niche छोटे में लिखा है that the village had 20 men and 10 women. So you know, things may not really be the way it seems, right at the outset, and
Since you
it.
said it, since you spoke about Maharashtra, in Maharashtra there is I'm born Maharashtrian, although I'm Gujarati, I call myself a born Maharashtrian. In
Yeah,
Maharashtra, there is a phrase which says "Dista tasam nasta." It
right.
means that it's not, what appears is not what it is.
Absolutely, absolutely. And in fact, I have people who take it a step ahead and who tell me another version, that is, "Je dista te nasta panje nasta tes dista." Like, people often perceive things that are not even true. That is also a problem, right? So, talking about people's perspectives and fears, and generally the fear when it comes to stock markets, it has to do a lot with the subject of risk. And जब भी हम रिस्क की बात करते हैं और स्टॉक मार्केट्स की बात करते हैं, एक बहुत ही वाइड स्प्रेड बिलीफ है, एक धारणा है कि जितना ज्यादा रिस्क उतना ज्यादा रिटर्न्स, एंड इट वाज ओनली सेंसेशनलाइज्ड फर्दर बाय द रिस्क है तो इश्क है वाला डायलॉग. So do you think that's the right way to look? Should people actually be seeking risk for in a gambit to gain returns? Is it actually the fact that only if you take more risk will you be able to gain more returns, or else you're going to get very subpar sort of performance? Is it really that? Is there a causal relationship or simply correlated? Like, how's it?
No, Nirav. So see, one thing we should know that lot of times, uh, see, things don't play out the way they are presented to you. Look, it's a very well-known thing that, if you ask me, let's say you ask me about my career, let's say you ask me about my investment performance, let's say you ask me about my life and about all the successes, right? When you ask me today, आई विल प्रेजेंट अ वेरी कोहेरेंट पिक्चर टू यू, राइट? कि मैंने ये स्कूल में पढ़ाई किया, फिर मुझे ये करना था तो मैं इस कॉलेज में गया, फिर मुझे रियलाइज हुआ कि नहीं नहीं मुझे तो फाइनेंस करना है तो मैंने ऐसे किया. सो सी, टुडे आई विल प्रेजेंट टू यू एज ए कोहेरेंट सीरीज ऑफ डिसीशंस एंड आई विल गिव यू अ पिक्चर परफेक्ट दैट आई एम अ मैन विथ फॉरसाइट,
Yes.
कि ऐसा मैंने सब प्लान करके डिलिबरेटली किया. करेक्ट? यू विल ऑलवेज गिव अ परफेक्ट पिक्चर,
Yes.
but life actually doesn't play out that way. In reality, I might have wanted to be an astronaut. Yeah, I got pathetic marks, I became an engineer, right? Then I was a bad engineer, I didn't do well in manufacturing or R&D. Then somebody told me कि भाई तुम एक काम करो, MBA कर लो, तुमको कुछ तो नौकरी मिल जाएगा. So that's the flip side, right? That's it. You can
Yeah.
paint a picture as bad, or you
Yes.
can paint a picture another way, that I wanted multidisciplinary approach. तो पहले मैंने engineering किया, फिर मैंने factory में काम किया, फिर मैंने MBA किया. So the same story can be presented
Yes.
either very coherently, or it can be presented as if it is pure luck. The answer
Yes.
is always in between.
Yes.
So what happens is that on this risk related matter, what happens is that we hear a lot of narratives. A lot of people tell us that they just knew exactly what they were doing. A lot of people will make us believe that they took calculated risks, that they,
Yes.
but ऐसा नहीं होता है. When you buy a company, like for example, somebody who bought Eicher Motors 15 years back,
Hmm.
the biggest bet was that Volvo is into a joint venture with Eicher, and they
Hmm.
will wipe out Tata Motors and Ashok Leyland, because why Volvo will have all the trucks everywhere.
Hmm. Hmm.
It didn't turn out to be a truck company. Mr. Siddharth Lal made it into a marquee, made it into a Royal Enfield company,
Yes.
correct? And truck never became the biggest thing, right?
Yes.
25 years back, Titan was making watches.
Yes.
There was no
Yes.
Tanishq.
Yes.
So see, what is happening is that there has been a bet which has been taken. But please don't tell me it's a calculated risk and everything was known.
Hmm.
Correct? So what I'm saying is that one needs to take reasonable, commonsensical decisions. And most important is to keep calibrating or recalibrating. Like when you buy Eicher because it's supposed to make trucks, and then you realize the truck thing is not working, but then you need to spot that, okay, Royal Enfield is becoming, blowing the lights out, right? Where you bought Titan because it has watches and it has just started gold jewelry, and then it suddenly evolves into many other things. So you need to keep an eye. You need to double down if it's working, and you need to get out if it is not working. So it is risk plus calibration plus a series of ongoing decisions which need to be made. Nobody can do something and then give you a picture perfect narration कि बॉस मेरे को तो पता था ऐसे ही होने वाला है, मैंने तो सब सोच के ऐसे ही किया था. It doesn't work that way. There are
Yeah.
many things which are contextual. There are many things which need to be calibrated. There are many decisions which need to be revisited. Either you need to cut losses or you need to double down on your successes. So
Yes.
it's not an absolute term. I don't think anybody can, I don't think risk is something which, it's the most complex topic if you really ask me.
Yeah, yeah. So Ashish, I feel there are so many questions that are coming up that we really need to move to the Q&A, and I need to ask
Please.
these questions that people are posting. So the first question, you have covered it in bits and pieces, but if you could still concisely reiterate, it is, if fuel prices stay this high for another 6 months, what could its expected impact be on inflation, interest rates, and growth expectations of the Indian economy?
Yeah, so it's without a doubt the longer fuel prices remain how they are, it's going to hurt us. There is no doubt about it. And our expected growth, let us say if we were expecting 7.5 or 8, has been brought down below 7. So 7% is decent growth, but if it remains like this, then certainly it is going to hurt our external, fiscal situation, fiscal deficit, interest rates, inflation. All of that put together, net impact is that our growth will come down. Okay, there's no two ways about it. But the point is that oil is already down by 20-25% from its peak, correct? Second is that there is some logic and arithmetic which has to work, because on one hand, if you are worried that the US is raising rates and their economy is going to go in a recession, and China is barely managing to grow 4-5%, and because of the zero COVID policy, they are also, plus their, the banking NPAs, their growth, aging population, rising labor costs, socio-political unrest, so many things, right? So long story short is that if the biggest economies in the world are slowing down or hitting recessionary trends, then why should oil keep going up, 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 and up, other than for financial speculation? And financial speculation cannot keep prevailing. So I'm not here to give some great view on oil. I'm just saying that whatever the gentleman or lady has narrated, if that were to happen, it hurts us. But everything is always probabilistic. So we have to see what probability you assign to that happening and how logical is it.
Yes, great. I feel very well sound. So there's another very interesting question. In light of your bullishness on the Indian economy, do you think it makes sense to still diversify into international equities, especially US equities?
See, US is the mecca of investing, and US is the fountainhead for all kinds of technological innovation. Just because the US economy has got overheated and they have to engender a slowdown by raising rates, that's a year, 2 year phenomena. I don't, I mean, I'm not a macroeconomic forecaster or something, but whatever I understand, US is always going to be the preeminent investment destination, and always going to be the preeminent, provider of innovation, technology. Right? I mentioned few moments back that the richest countries in the world are aging, and they will not be able to sustain their growth. But US is a country of immigrants. It was originally populated by the Brits and by the resident, the uh, previous inhabitants, right? And then it's just continuously 300-400 years of continuous immigration and reinvention, correct? So they are the best example of how things evolve, and free market and those kinds of things. Of course, there are many things where they are behind us, like payment systems and stock markets and futures and options, and many things they are behind us, right? But US is always going to be a preeminent investment destination. I think everybody should have money in US. Yes, next 1 year you may be a bit pessimistic about what will happen in US purely related to stock markets and the economy, of course. But I think that is a 1-2 year phenomenon. I think everybody should be invested in US. There's no doubt about it. And someone like Nirav or the team at Fisdom, for every individual investor, you all can decide what is the allocation. But since I'm being asked a generic question, I'm giving a generic answer.
Yes, absolutely. So another very interesting question, and I'm sure many people have this question, though only one guy has asked it. It is considering the economic growth story that is impending, which sectors do you believe will lead the economic growth in India?
Nirav, basically, we are not the first. We are now $2,000 plus in terms of per capita income. Thankfully for us, we are not the first country who has crossed that $2,000 or whatever it is. And there is a template to it, right? What Vietnam is, say, $3,300 per capita income, and Thailand and South Africa and all are $5,000-6,000 per capita income, and China is $9,000-10,000 per capita income. US is 65,000, and Qatar is 130,000, and all, right? So there is a so this per capita income business is like a video game, correct?
Hmm.
When we were kids, we used to play video games, and at least what I played, those things like Prince of Persia and all. What used to happen is, when you become a better and better player, the game becomes faster and complex, but you also become a better player. More tools and more weapons open up for you, right? So your capability, your competency also goes up, but the game level of difficulty also goes up. So it's well known that, let's say, for example, when countries cross certain per capita incomes is when certain sectors become more salient. Like
Yes.
when your $1,000 per capita income, let's say insurance, when your $1,000 per capita income, how many people need insurance and who will insure you, right?
Yes.
But when you're $2,000 per capita income, then obviously there are some people who are hitting that level where they need insurance and where companies are happy to insure them. Correct.
Yes.
Why is it that only now Apple wants to set up all these factories, and why is it that Foxconn wants to set up all these, uh, you know? So why is it that all this investment is being attracted into India only now? Correct.
Hmm.
So the point is, the question is what sectors. So if you really ask me, I think that if I have to give one answer, I would say banking, capital markets, and everything to do with consumer discretionary products.
Yep.
Those are the things which are uh, going to be, there's nothing secular. I might say this today, and 6 months later you might find some of the stock prices are down. That is how stock markets behave. But I
Yeah.
presume you're asking me a 10-year question, and I'm
Yeah.
saying that, if you want to have something, if there is anything called a no-brainer, then some of these things from a 10-year perspective are no-brainer, because when per capita incomes rise, people want to look better, they want better facilities, they want to travel, they want to avail of financial services, they want insurance, more people will invest in mutual funds and capital markets. So these are the things which happen, and I'm not saying something new about India. This is how the world has behaved as it has progressed.
Yeah, 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 absolutely. So I feel that is a wonderful answer. So for all of those who have been wondering which sectors, I feel this should be a good starting point. This is not any form of advisory, but I feel that's a good starting point for each one of you to start running your own personal investigation, and let discovery be a byproduct of investigation and not the other way around. So Ashish, one final question. It's a really straightforward. The question is straightforward. The response may not be. Is now a great time to go overweight on small caps?
So, Nirav, you can answer that depending on each client's individual
Yeah,
circumstances, but I would
yeah,
not say, I don't think you should do anything like that. See, guys like us, we manage portfolios at WhiteOak. We are generally half in small and mid cap and half in large cap. We
hmm,
don't want to create any biases in any portfolios. So, like, what makes you feel that now small cap will do very well?
yeah,
It's like you are taking some top down call, or it's like, some macro decision you are making. Best not to do that. Returns are made from the growth, cash flow growth, and earnings growth of individual companies. So at any point in time, there will be good small cap companies and there will be bad small cap companies. Yes, I know the question is coming because by and large, small cap is at a discount today.
yeah,
So that's a generic feeling, and that feeling is right. But let's take an example of last 5 years, 2015-16 till 2018. Small and mid caps blew the lights out. 2018 to 2020, it was a disaster. 2000, remember clearly, April 21 till September 21, small cap index went up 35%. and today the small cap index is lower than where it was in Jan 2018.
Hmm.
Okay, so pura gains tha, pura everything, right? But individual stocks have made money. So why you want to get into this thing of calling that small cap build? I've given you three examples where small and mid cap did very well and then really got lambasted. So why
Yeah.
should you take those chances? I think multi cap is better. Bottom up stock selection works. Why to create any bias in the portfolio?
Right. You made a very important point, Ashish. Even I'm personally of the opinion that ये जो generalization वाला term है, right? I always tell people there's a thin line between simplifying and trivializing something, right? And ये जो एक generalistic term होता है कि small caps, mid caps, large caps, ये these are individual companies that come under a family name, and these strengths, weaknesses, opportunities, threats are extremely different at a company level. So you spoke about bottom up stock picking that fund managers do and the perspective that they bring to it. I feel that's what really creates a distinction. I feel it is only going to trying to identify small cap पे overweight जाना चाहिए as a basket. और small cap बोलते हैं कितना बड़ा universe है, right? तो small cap में invest करना मतलब किस में invest करना? तो huge universe, everything,
Absolutely.
by definition everything below the first 250 stocks is small cap, right? Largely, by and large, small and micro मिला लो, right? So that is investors trying to see clarity on such a generalized basis. I feel quite often than not they it is metaphorically chasing your own tail. You feel that you're chasing something, but you'll just be going round in circles because you won't really get any answer to it. Like Ashish said, it is all a matter of selecting the right stocks from a fund management perspective, and from an investor perspective, selecting the right funds. Right, you select the right funds with the right mandates, with the right kind of fund management expertise, the right framework, and that it should do well. Agar opportunity large cap mein hai, mid cap mein, small cap mein hai, that is a derivative, a byproduct of the stock decision or the sector decision that the fund manager makes. So Ashish, I completely am in agreement with your point around the importance of bottom up and how every individual company is different. Just like you quoted तीन examples, मार्केट इंडेक्स, स्मॉल कैप इंडेक्स ऊपर नीचे जा सकते हैं, बट उसके अंदर के जो कंपनीज है उसने पैसा बनाया है.
Absolutely.
जब
Yeah.
जब इंडेक्स ऊपर था तब कंपनीज ने लॉस किया, जब इंडेक्स नीचे था कंपनीज ने पैसा भी बनाया. It's absolutely possible. So Ashish, this brings us to the close of the session today. I feel it has been a wonderful conversation as always. I'm pretty glad that we had this conversation. There's so much for me to take back from this इंटरेक्शन दैट वी हैव हैड, एंड आई एम वेरी श्योर कि हमारे ऑडियंस के पास भी कई सारे ऐसे पॉइंट्स होंगे जिसपे वो सोच सकते हैं, विचार विमर्श कर सकते हैं एंड बेस देयर डिसीजंस on it. Or obviously we are obviously available to help. You can write to us at research@fisdom.com, and the team here will be glad to help you with your portfolio related queries. So apart from that, Ashish, fantastic as always. A super interesting and insightful conversation. I'm just so glad that you were able to take out the time and share your perspectives with
No,
us.
thank you. Thank you, Nirav. Thank you for calling me to speak to your clients.
Thank you, Ashish. Great talking.
Thank you.